Hello and welcome to this edition of The Money Show, where I am outside the studio, obviously, as you can see, and I'm at Pratik Oswal's office. And today we are going to talk about only passives. And the person I'm going to have this conversation is with is someone you've been following, maybe as far as your passive investments are concerned, or at least taking his tips and tricks to implement in your portfolio. I'm talking about Pratik Oswal from Motilal, and obviously head of passive investments. Thank you so much for taking time out and joining me for this. And although I will be talking about passive investment and the way the trend is catching up in India, but before that, let's just talk about a market overview from you. I just want to know, how is the Josh?
Josh is very strong, to be honest. I think it's been surprisingly strong for a very long time now. I think and still it goes strong. So I think
it doesn't seem like ending also.
I don't think it's looking at ending. I think we had a bit of a setback in February or March,
right.
But I think markets have recovered then.
Totally.
And I think what's good about the Josh market is that it's not only Josh, it's also underlying companies also doing very well.
Okay.
So as we know, markets over the long term trend towards the profitability of the underlying companies. So what we've seen is that even though there's been a lot of in the market, people have made a lot of money, companies themselves have also done very well. So because companies have done well, valuations are still not crazy.
Okay.
So I think people are looking to enter the market or looking to invest. This is also a great time.
So valuations are not crazy across market caps you're talking about. Yes. Specifically mid-cap and what do you think?
I think large caps are obviously not are actually below term valuations.
Okay.
And mid and small cap is still not. They are slightly higher than long-term averages, but I wouldn't say they're in the danger category where you should be avoiding or switching your portfolio from small caps to large caps.
Okay.
So that's very important. The second
not
thing,
even reshuffling and rebalancing that should be done.
I think if you are looking at an allocation towards small and mid caps, if you're saying my allocation is 40% and that's 40% has got to 50%, it's very important to rebalance it back to 40%. Okay. But I do feel that in terms of finding value, I think there is a little bit more value in large caps at the moment than mid and small caps. Having said that, I think also the risk levels of small caps have changed over the years. Okay. You can't attribute the same level of risk to small caps that you did 5 or 10 years ago. Right. 5 years ago, a small cap company in India had a market cap of about 4.5-5 crores. Today, an average small cap company in India is 25-30,000 crores. Increased almost 4 to 5 times.
Right.
So these companies are now very stable balance sheets, stable profit and loss, very good business operations, good governance. So I do feel that small and mid caps offer a lot more stability than they did say 5 or 10 years ago, which I think they're a lot more investable today than they were before.
So would you also recommend viewers or your investors to maybe analyze their risk, when we talk about having their exposure in mid cap and small cap, like how you said that, just rebalance it depending on the exposure in your portfolio. But do you also think it's time to maybe modify your appetite towards this particular category, especially when you that the risk is still not very high and the certain pockets are still very attractive?
I do think so. I think the portfolio should go beyond the large caps.
Okay.
And the reason why I say because large caps in India, say the Nifty 50 for example, Nifty 50 in the 1990s when it was formed, it was a very large part of the market. It constituted all of the large cap stocks. Today the top 100 stocks are large caps, and tomorrow maybe the top, the breadth of the market has increased in such a point where if you're playing the large cap space, you're playing a very small part of the market.
Right.
So I do feel that, and we feel that a lot of investment opportunities are happening in mid caps and small caps. Obviously, small caps are high risky, but I do feel that an average mid cap stock today is 75, maybe 60 to 70,000 crore. They're behaving like large caps as of yesterday's. So I think it's important that investors also keep that in mind, and maybe it makes sense to add a slightly higher mid cap quotient if you are risk averse today because of the opportunities in that space.
Right. How much of this interest are you seeing coming in from passive investment in mid cap and small cap specifically?
Yeah. So when it comes to passive funds, a lot of the action happens in the large caps, specifically Nifty 50 and Sensex. Right. If you look at the overall flows in the market, about 80 to 90% of the flows happens only in Nifty and Sensex, and this is purely because of pension funds. So about 80% of all flows into passives happen towards EPFO, pension funds, institutions, family offices, and they tend to stick to Nifty 50 and Sensex. Okay. So I think yes, flows are disproportionate towards the mid. So mid and small cap is still growing at a very fast rate.
True.
In comparison, it's still very small.
So talking about having passive funds for mid cap and small cap, do you think is the right strategy, and why this kind of a strategy? Not you, but a lot of other AMCs also. And suddenly there's a lot of interest coming in for passive investment, and specifically we saw that coming in a lot for large cap. But then suddenly we see mid cap, small cap, micro cap also coming in. You also have a fund, right? So the universe is actually very large, Pratik. If you talk about these market caps, you know, we have to really trust the expertise of the fund manager, okay, and that is we earn out of, you know, in terms of profit as well. But when you talk about having a passive strategy for these market caps, how do you generate alpha and how do you beat the expertise of the fund manager, or that's not the logic over here at all?
Yeah, so the logic is to keep it simple.
Keep it simple.
To, you know, track the index. You know, I think the ability to really pick and choose the right fund is a lot more complicated than it is, because you have so many options.
Yeah.
I think the reason why passives work across different categories is because it makes life simple.
Yeah,
you're essentially buying the benchmark. You don't have to worry about performance, poor performance. If you want to invest in a mutual fund over say 30 years, you know, which mutual fund are you going to choose? You know, passive funds selection a lot easier. What we've also seen is that over the last 5 years is that of passive funds are now almost on par with actively managed funds, especially mid and small caps as well. So I think there, you know, people are not really missing out on a lot. So I think simplicity is one big reason.
Is it also because of the market movement right now that we are witnessing, or even in the market we've seen this kind of a performance?
In general, you know, what happens is if you look at the US, you know, their passive funds are actually doing better than actively managed funds because the market is very efficient.
Yeah.
In India,
but the market developed over there.
Very developed, very efficient. In Europe, it's not that way. So there's a lot of ton of opportunity to generate alpha, no doubt. But when it comes to passive fund, it's really simple. It's very simple. That's one. It's also low cost. There's a lot of interest in funds which are lower cost. Because the moment you have low cost funds, more of your money is invested in the underlying stocks.
Yeah.
So basically, you can really, you know, play a much bigger part into your existing stock portfolio. So I think there's a lot of interest that's happening in people wanting to buy low cost funds. And third is, again, as I said, you know, I think performance, if you look at any other mid cap or even a small cap passive fund, I would say they're in the top 5, top funds, you know, overall. I think performance is also pretty good. So I think there is, and most importantly, there's a lot more awareness about passive funds than they were 5 years ago.
Yeah, true.
I think no one really knew that passive funds were on Nifty and Sensex. Those were the only sort of two. In fact, when people say passive, they say Nifty and Sensex. But actually, there's a whole host of passive funds.
So we have across asset classes. I mean, we talk about equity.
You have equities, you have fixed income, debt, you have commodities, you have you know, sectors, bank index, IT index, healthcare index. You have factor funds. There are strategy funds where you can buy into strategies like quality, growth, momentum. So there's, you know, hundreds, maybe I think 250 passive funds today in India, and there are two options: there's ETFs and index funds. So people can really choose what they.
But that's also making it complicated, no?
It's. I think I don't disagree with that, to be honest. I think it is. The choices have made investment a lot more complicated. But you know, my belief is that most people should stick to the simple funds. As a AMC, we have to cater to a large amount of customers. You know, we have HNI investors, we have institutions, family offices. So we really need to think about all our customers. And unfortunately, we can't target certain funds, certain customers. It's open-ended.
Exactly.
So I think we will continue to launch funds based on demand coming in from our investor base. But for most investors, sticking to a very simple Nifty 500 or a mid cap, small cap is something which we believe is the best way in order for you to really select the right fund for your portfolio.
So you spoke about launching funds. There's a digit figure, I think, that's coming up in next 2 years as far as launching passive funds are concerned. So what is it all about? You will be talking about it a lot more days, but then just to give us an idea.
Yeah, so I think we currently have 33 to 35 funds, passive
Is that the highest number of funds you have in the entire industry?
I think so. I can't confirm, but I think we should have the highest number of funds across ETFs, index funds. And we're looking to maybe double that over the next 2 or 3 years.
Wow.
Time. So that's a plan in action. So, but I do believe that the idea is to really cater to all our customer segments. We have maybe 1 million plus customers who are investing in our funds. We have a lot of.
This is just retail number that you're giving me, or retail is a chunk of this?
This is including everything. ETFs, index funds, including everything. So it's a good customer base, and we keep on getting demands from them. So the idea for an AMC is to not really promote all 50 funds.
Exactly.
But it's to really talk about a few funds, and if there is demand for any other funds, then they can use this to invest.
What made you come up with a microcap? Microcap fund of fund, if I'm not wrong.
No, it's an index fund.
It's an index fund. Sorry. Okay. So why that idea? Looking at the market trend, or you thought there is an appetite that kind of a risk among investors? Because the idea is really great, but then we also have to do risk management for viewers. You think they're ready for it?
Most investors are not, to be honest. Microcaps are I would say they're very small. I mean, honestly, I think people tend to misunderstand microcaps also.
Okay.
People think of
It's
microcaps.
just much risk and you will lose all of your money. So,
Yeah.
so the limitations are actually a lot, Pratik. If you know, there is no research, there is no company clarity.
Yes.
I mean, what a lot of people, analysts also face, which is we see a lot of them not covering a lot of companies as well. So how are you going about it?
Yeah, so it's an index fund, so it doesn't really matter how many analysts there are, there's any coverage. In fact, the only way to pay microcaps today is through an index fund. There's no other route because there is no material on how these companies are, what they're doing, what their performance is like, what their businesses are like. So I think microcap can be paid through an index fund. We were the first ones in India to launch, mid-cap, small-cap, multi-cap, sector funds in the index fund space 5 years ago. And we believe that, microcaps are big enough for us to launch a fund into it.
Right.
We believe that a lot of investors today are looking at microcaps as a way of wealth creation.
Right.
And it has done well, to be honest. It's beaten everything else. But I also think that it comes with a lot more risk and volatility.
So the aim,
so I think investors need to be aware of their risk profile before investing in microcaps.
True.
However, I do think that they're still quite large. So the average microcap company will be about 3.5 crore market cap. So they're not really like very, very small companies. They're decently sized. And I would say that a lot of our investors are using SIPs as a way to invest, which I think is a good way of creating wealth in that category because it's very volatile. The only way to really build wealth is to do it slowly.
So passive SIP book, if I just want a number from you, an approximate number from coming in from investors specifically, maybe in last 2 or 1.5 years, how much has it grown for you and which categories? Because you have passive funds across categories, index and ETF.
Yes.
So what is doing well? What's the kind of number in SIP book that we are seeing?
Yeah, so honestly, we were unfortunate 2 years ago when we had to really shut our international funds.
Yeah.
So at some point we had about 2.5 lakh SIPs coming into our international funds only, and we had to literally overnight stop those flows. Now they're on again, but a lot of flows we've lost over years. So I would say that SIP numbers, compared to where it was 2 years ago, is actually less today, which is funny because a lot of the flows came to internationals where we are number one. But I still feel it's a very healthy. We have good. I think I wouldn't be, but at least more than 1 lakh SIPs coming in a lot of our domestic funds at least. So it's pretty healthy. I would say that when it comes to passive funds, SIP is not the dominant way of investing. Most people tend to use lump sums. A lot of people tend to want to use passives as a tactical way of playing the indexes.
How can you do that? Just
I think if someone has a bullish call on small caps for the next 3 months, they can just buy a small cap index fund and they can sell it after 3 months. So tactical has also improved a lot.
That's very interesting.
And also a lot of coming from family offices, institutions. So I think if you look globally, even the 60 to 70% of all the passive funds are actually bought by a lot of institutions and family offices, which will probably happen in India over the next 10 years. So those will be a dominant sort of AUM force in India when it comes to passive. So I think most of the AUM will be with them.
So talking about international exposure, and a lot is to be done. I mean, all the AMCs are talking to the regulator, going back and forth, even with the RBI. But right now, if someone is listening to you, watching this show, and want to really replan their international investment exposure in the portfolio, what's the right way according to you to?
Yeah, so I think there's still some funds open for SIPs and lump sums. So you could look at investing through mutual funds as well. There's 2 options: mutual funds or LRS. LRS obviously.
Then the limit comes.
You have a limit, but for most retail investors, the limit is big enough for them to invest. I think LRS comes with a lot of hidden costs, which investors do some due diligence on. The cost of remitting money and getting back to your bank account, it's a bit cumbersome. There's more paperwork. There's a TCS that you pay for it. So I think mutual funds is much simpler, but unfortunately, most mutual funds are now shut. There are a few of them still open, so I think investors can look at them for the international diversification. We are hopeful as an industry. We've been lobbying very hard to ensure that these limits open up. May not be big limits, but whatever limits there are, I think retail investors will really benefit because most investors across the world in any geography have some of their money outside of the home country. So it's important for us to also have some of our portfolio outside. And to be honest, mutual funds investing overseas, the money will come back eventually, right?
True.
Because it will sell at some point.
Very important
So I
aspect
think
of
it's going to come back to us.
Yeah.
A larger amount. So
Yeah.
I think overall, it's mutual funds, to be honest, are more transparent, low cost, and also I think overall it's good for us because over the long term we can see some coming back.
True. I've gone beyond time limit for this interaction, and I still have a lot of questions for you.
Please.
I have to wrap this discussion up. Before we do that, one passive investment mantra to our viewers directly into their camera.
I think when it comes to passive funds, this is to all the viewers. Please keep it very simple. I think there's a lot of options out there. There's ETF, index funds. I would say between ETFs and index funds, keep it very simple. Do whatever you think is convenient. Don't overthink it. When it comes to passive funds, I think most people would recommend keeping the basics in your portfolio. Don't go too crazy with sectoral funds or whatever it is. That's what my recommendation is. Keep it simple.
And for someone who wants to begin their journey of investment, a passive fund can be good?
Yes.
The first fund ever?
I think it's the simplest fund. Yes, I think a passive fund can be a good start to start your investing process. We always tell investors you should begin as early as possible.
True.
Because it happens to compounding, and to compounding to happen, you have to invest very early. So I think to all investors, please invest as early as possible because you have to give your investments 10, 15, 20 years for them to really create wealth.
Diversify your portfolio and be disciplined in your investment approach along with what he's. Thank you so much for being on the show today. Thank you so much. Lovely talking to you.
Thank you for having me.
Thank you. And that's all from me. Thank you so much for watching. Goodbye.
If you like this video, then like, share and subscribe to ET Now.